But I was just on a phone call with a client who said, can't remember what deal it was, SpaceX or OpenAI or something, very popular deal. And they would like to sell their SPV. So they have an SPV sitting on the cap table of OpenAI and they want out. And if they try to just leave, they can't swap the name, right? It can't be Steven's on the cap table. Now Jeremy wants to be listed as Jeremy, but I can take that SPV and kind of just buy the SPV. So it stays the original SPV or person on the seat. But now I get to kind of snuggle up and get inside that SPV. And now I get the future benefits of whatever future exit comes up.
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. Mr. Jeremy Neilson, welcome to the show. I'm excited to have you here, man. You know, you've got a really cool background, and right before we hit record, you're telling me you've been in the game since 2013, and that's quite a lot of experience from being in the game for that long, but also, what was it, closing something like 9,000 SPVs? Is that about right? Probably more now, right?
More now, but yeah, that's a good round number. I'm not going to update it until I get to another 500 or so.
Yeah, I like it. Almost 10,000, right?
Yeah.
But dude, you know, impressive background, attorney by training. You know, you've built and scaled, this company, Sally, which we're going to be talking about, as well as just educating our audience around SPVs as well. And like I'd mentioned to you before, please feel free to go into a little bit of detail. If there's an acronym or something like that, you know, please expand on it. We have a variety of listeners here that we can serve. But with that, please, would you just give a little bit of background in your words of who you are, what you love talking about, what your passion is, what you're here to talk about?
Sure. Jeremy Neilson. I am all things SPVs. Like you mentioned, I went to law school and used that as a kind of a leaping pad, if you will, to private asset investing. And so I've just been part of private asset investing for a long time now. You mentioned at the beginning, 2013. That's when I started doing SPVs. Private asset investing, I started 2003, more on fund to funds, a program that I was a part of. And so just been really deep and dirty inside all the details around legal, tax, accounting, admin, compliance, getting my hands dirty in there, and then making it easier, making it smoother, making it so that private asset investing isn't so scary or complex.
Yeah. And that, not to highlight over what you were talking about, the fund to funds thing, but that was for the state of Utah, their fund to fund, right?
Yeah.
And so lots of constituents, lots of stakeholders, and huge impact too, right? So got to see a lot of the details. That's really cool. You know, hopefully we can hear more about that, but let's make sure we're getting to the nuts and bolts of this. So what the heck is an SPV, Jeremy?
Yeah. SPV, it's an acronym for special purpose vehicle. And it really was about, I don't know, kind of maybe lawyers that put this acronym on. If you think about it, it's a vehicle. So you kind of go reverse order. So special purpose vehicle, you start with the V. What is it's a vehicle? And what a vehicle is in legal terms is an entity. Typically it's an LLC or an LP. So you go and set up an LLC. So kind of deconfuse that. So the vehicle is really an LLC. Why did we set this thing up? It's for this, special purpose. What's the purpose of this? We have a reason for it. So we've set this up and it's for a special reason. What that means is it's for one-time thing or a narrow purpose. And typically you'd set up an LLC to start a business that has complexity and texture and longevity to it. A special purpose vehicle is really set up to do one thing. And that's typically to invest into a private asset. Mm-hmm. And so private assets are real estate, startup company, secondary, film, royalty, oil and gas, whatever. It's anything that's not on the stock market. And so it's a very diverse, deep category. I've seen people do it for like diamond mines and gold mines, and like people will do it for like leasing airplanes or even doing it for a barrel of whiskey that's going to increase in value, and so it's whatever you want it is, some special purpose, some special idea. And so you go and set up this vehicle. So that's what it is, an LLC to aggregate investors so you can go buy something with it, with the money.
Thanks. I appreciate breaking it down, especially it's like, word by word on it. And I always think it's fascinating because all the things you mentioned, like, whether it's or whatever the asset you're investing into, as long as it's not on the stock market, right? And publicly listed. So anyway,
private assets category is much, much larger than the public. You might think that the public assets as a group are larger. They're not. It's private assets are much larger.
Yeah, absolutely. We're here for this podcast. I mean, everyone's here listening, real estate for tech professionals. So very much the same kind of thing of pulling investors to go invest in something like real estate. But just like you said, because I know you have a huge background in VC, venture capital, investing in business as well. That's one of those other categories, just like you said. So awesome. So you platform Sally. And my first question is, why Sally? And the thing I heard you talk about this is it's another way of saying venture or go forth, right?
Yeah.
So how did this come up? And, any other texture you can add around, Sally origin story, I'm sure is kind of fun to talk about here too.
Yeah. So for me, branding, I have a particular policy or philosophy, and that is you have to be able to spell it when you hear it and pronounce it when you see it.
Oh, yeah.
So that's my philosophy. And so I was looking for a word for my private asset investing SPV software and just digging, actually like a website called Word Hippo.
Yep.
And Word Hippo, right? You put a word in, it'll just like generate synonyms and everything. And so I was just in there, just digging and writing lists. And could I get the URLs? Was another part of the journey. And I'm a little older, right? So I was born in the 70s. And growing up, there was a phrase, Sally Forth. It was a phrase that we use. It's a phrase that I've heard. I've seen it in scripture. I've heard it been said. And it's really kind of a military term. Like to sally is to go forth in order to do something difficult. And so it's kind of maybe lost a bit of that definition in recent generations, but I really like that. I also like that it was short and I could get sally.co. And sally.com is owned by a woman whose name's Sally, and she has kind of a Wikipedia page about herself. She's a professor. And so it's not like it's a competitor or something else that might get kind of confusing. And so I just got excited, short, easy to pronounce, had a definition that fit what I was building or communicate what I wanted to communicate. And it's kind of fun as well. It can be a fun word to play with.
Cool. I mean, I'm sure everyone listening can know at one point in time or another working to build something and needing some domain and some name and just, it's like, it'd be really cool if, but it taken, So finding this, that the cross lines and intersection of it working out, having good, value and all those branding components you're talking about, easy to pronounce, easy to see, easy to spell, etc. Yeah, makes a lot of sense. And I wonder, if you want to comment on this or you can hear if some of those, as a company, maybe core values or like kind of internal leadership principle style things did it make it in the company as well? Related to Sally Forth and venture and go out there and get things done?
No, it didn't. I'm just going to be honest. I like the idea. We do have our company core principles.
Yep.
And I'll tell you one of them that I think is the most fun one, which is video on. And our company, we're remote. I require everyone to have their video on all the time. It's probably because I'm older, right? But it's like, I'm not staring at that screen. Turn your video on. I want to look at your face. I want to see your expressions. I want to see you smile. If I crack a joke, I better see a smile or something on your face, right?
Engagement.
And so, but no, the other thing about the Sally brand that I have is my platform is a white labeled platform. So when people if someone's like, I don't like the name, I'm like, doesn't matter. It's going to be your name on your platform. It can be your URL. So don't really worry about it. It's really kind of for that marketing, and people can remember it. People can spell it and find it. And so even if someone's like, I don't like that it's a woman's name, like, that's okay. I don't put any sort of Sally branding on it when you have your own platform.
Cool. Outstanding. So talk to me about, what problem does it solve? This is really a thing, right? I have a little background in this, have a bit of an understanding of this, but I really want you to talk about like, who is this for, right? Who is the platform for? How does it help, the investor as well? And what had to be done before Sally, right? And then what does it Sally do as a platform now?
Yeah, for sure. So SPVs can sound and maybe even appear simple. We'll set something up, we'll sign some documents, people will put in some money, and we'll buy this asset. And at that description, it is simple. But however, everything within SPVs have a lot of different angles or branches or side quests, if you will. And so if everything just went the way you described it, like, oh, we'll just simply set this up, we'll sign some documents and everyone will send in their money, it would be simple. But there's just so many edge cases around so many of the different aspects of SPVs as it gets quite complex. And so when it gets complex, it causes work. And when it causes work, you either get fatigue or the costs go up. And my goal is to make SPVs and private asset investing easy, where all you have to worry about is finding deals, finding real estate, and finding friends and other people in your network to put in money. That's difficult enough, let alone to then have to deal with legal, tax, accounting, compliance, all that stuff. And so what went into Sally was 9,000 SPVs. Mm-hmm. So when I started in this business many years ago, the origin story is that I had a law degree. I had launched and ran this Utah Fund of Funds program. So I knew private asset investing, but SPVs weren't really a thing. So this was 2013 that I got this phone call. So in 2013, SPVs really weren't a thing. They were, if you went to a law firm, you'd pay hundreds of thousands of dollars and it was just really expensive. So I was at my house. I was actually in the backyard pushing my child on the swing. My cell phone rings and it was AngelList. And this was back when AngelList had 6 employees and I had 2. There's 2 of us. And so AngelList says, hey, can you figure out how to do funds in bulk? And that, because SPV wasn't even a phrase. We weren't even saying it back then. AngelList, who said, can you do funds in bulk? Meaning, can you set up these venture funds in bulk, right? I'm an entrepreneur, so I said yes, not quite knowing what I was saying yes to, but I'd done a lot and I was an attorney and I had a deep network and I knew I could figure it out. So yeah. I said yes. And they immediately sent me like 8 SPVs to do. And I was just drinking out of a fire hose and figuring it out. But every single SPV has a little bit of texture and character and nuance to it because the asset's always different. The terms are always different. The investors are always different. And so because of these things, there's always this edge stuff that's going on. And so we started doing SPVs and they were all manual. So we did everything manual. I still remember we were typewriting stuff out. We were getting envelopes with checks in it mailed to the office. I was walking into the bank almost every day to set up an account or do deposits or send money out. And then we did that for a while. And then we're like, what would really help this whole flow is if and then the tech started to come, right? Mm-hmm. Signing some documents. So our first tech was to build a little bit of technology on top of Salesforce. Mm-hmm. And then we're like, okay, that was nice, but there's a lot more here, a lot more work. And let's start with something of our own. So we worked on building something. So we released our kind of version 1 of a more complete platform. And that was great, but, missed lots of features. And it really was like a input output system with a lot of humans on the back end. It was like, you tell me X and then I'll run around and do it. And then when I do it, I'll come back to the system and type it in and tell you that I'm done, is really kind of what it was. And then there's all this edge stuff that's not on the platform and there's no functionality. So what happens is you create an online process and then you have an offline process. And because an SPV has on and off investors or flows or documents, now you need a third to combine the two. So now you have like a master umbrella. So it just really created actually more work to have software that wasn't complete. So we did that for a while and we were working on the next generation of the software. And so we built that, and that was far more in depth, better architecture, better structure, a lot more features. And so Sally is my 5th iteration of software. And so I can't imagine anybody building SPV or private asset investing software at all without having done most of things manually, just so you even know, and then knowing all of the edge cases, like that an investor may do this, a foreign investor might do that, this type of profile, this type of investment, this type of distribution, this type of taxes, right? All those things that go into it really is what has gone into Sally. It's, 10,000 tax returns, 9,000 SPVs, $500,000 or $500 million in distributions.
Nice.
300,000 different investors onboarded. Just all those use cases then give you the knowledge that these are the features, these are the functions, this is the architecture, these are the modules, these are how these things combine, this is the output, all that stuff is kind of necessary before you can really build one. Otherwise, you're going to create yourself a lot of work by missing some of those and then creating more workflows off platform, and it becomes a nightmare.
Yeah, absolutely. I mean, wow. Okay. A lot there, right? Having domain, I'm hearing the amount of, first off, I absolutely love that you committed. You got the phone call from AngelList and you're just like, I'll figure it out. Very Richard Branson of you. Screw it. Let's do it. Right. But, second, just talking about the amount of manual work that is involved, right? It sounds good in a perfect world, just to spin up this SPV thing and go invest in the thing, which is great as a, 1 or 2 liner of, this is how you invest in private assets. But like you're talking about, like there's things involved, setting up bank accounts, right? Getting all the paperwork done for whatever the entity is. And I think it's usually a Delaware entity for Sally, right? You guys set up.
Yep.
You're talking about compliance. There's other things like checks and governance that needs to be there for investors who do want to invest, like know your customer and any anti-money laundering type of stuff there as well. Private investment's huge for KYC, know your customer. But then additional stuff there too, right? And that takes time. That takes talking to the lawyers and the banks, et cetera. And so this is just some of the manual work that's there. And so this is what, as you would say, what syndicators or fund managers would have to set up before they ever decide to go and, or in parallel or whatever, as you pointed out, is equally as hard to go aggregate your friends and family or whomever to go and get your investors, let alone go find an asset to invest in, right? And so simplifying, like all of that manual work, Sally helps to simplify those types of things with the banks and the entity setup and the entity governance and making sure you don't get in trouble with the SEC, right, et cetera, so that it's all on one platform. Is that about right? Not to mention taxes stuff too, right?
Oh, absolutely. So it automates all that stuff, all those experiences, all those manual workflows, all of the bad tech that we've built. It just automates everything. Where you click a button, SPVs created. You click a button, documents are generated and shared with investors. You click a button and you can close a deal and countersign all the documents. Investors have the opportunity to send in ACH or do a wire right from the system. The system will auto-reconcile money that comes in. There's the KYC AML that's on the back end. So meaning people will fill out a profile. And that profile, to be a little more descriptive, it's individual or it's an entity like an LLC.
Per investor, right?
Yeah. So investor comes in, says, okay, I've got $10,000. I'm interested. You say, okay, great. Who's investing? You, John Smith, as a human, or do you have an LLC? Do you have a trust with a spouse? joint tenancy? Do you have some retirement funds and an IRA? Right. And so you say, well, I want IRA money. I've got some, right? Okay. So then in Sally, it says, okay, who's that custodian? Do they need to sign the documents? Does the custodian need to sign these documents, or are you signing them? And so I've talked with IRAs and done this for a long time, where this, just as one example, Sally has a functionality where you say the custodian has to sign. So you walk through the flow, you hit submit, the custodian gets the operating agreement, gets the wire instructions, and they get an email to come into the platform for them to sign the documents on behalf of you as the investor, because it's your money, right? And then they get notified of counter signatures and all this stuff. So it's just kind of one small example of kind of the texture of having to build out all of this various stuff. But so Sally's worked really, really hard to automate all of these things. So they're all in platform, and people will be like, what about this in the platform? What about that? It's in there. So,
yeah, that's cool, because it really simplifies the life of the capital raiser, right?
Yeah.
Of the capital raiser, without, you can go straight to Sally, straight to you and your platform to have the, like I said, the bank accounts, the whatever, all the things put together all in one place. Yeah. That cannot be understated, right? And then for the investor, same thing, one portal, right? They can do the profile, fill in the profile, like you said, get all the verification, get the information for how to send funds based on how they want to, and can go take those steps, and seeing the pipeline too of like, okay, this step and on to the next one. And I think that's really cool, because again, all in one place. So can you talk a little about, because there's so many more investors on this call on listening on this podcast than would be, operators or, fund managers or anything like that listening. But what does that experience look like for an investor? Like, say they go do their profile, right? They go through their verification, they put in everything they need to, they go through the verification process, and then they invest. What should they be expecting, after they invest? And I know it depends on every single deal and all that kind of stuff, but what else do they need to do in the profile? What should they be expecting to see inside of the platform?
Yeah. So for investors, everyone's different, but for the most part, they really want to feel like they've been updated, that they know what's going on. I'd say the number one thing that they're most concerned about is, did their money arrive correctly, right? We all worry about being taken advantage of, or fraud, or losing our money. So they go through a profile setup. They then walk through just a few screens about, I'm going to put in 10,000, sign the documents, they get the wire instructions, and then the system's sending them notifications around things that were completed, sending them wire instructions as well, so it's in their email. And then once they send the money and the system reconciles it, then they get an email saying your money's showed up, it's there. If the money doesn't show up, the system will send them emails like, hey, just letting you know, it hasn't shown up yet, just in case you were wondering and whatnot. But after that, they then are waiting for the deal to close. So investors put in their money first, and the organizer, the syndicator, they're aggregating money. So they're running around talking to people. And so everyone's waiting and waiting while more funds come in. But then at some point they close, and they're going to get emails and notifications about the deal is closed, your funds were used. Now they get a capital account statement in the system. They get their documents that are countersigned in the system. And so they then kind of get all that stuff completed, and it's all kind of good for them and their record keeping. And they feel confident that they're in the system, that they're in the deal, that the money that they put in actually made it. Also that the dollar amounts match, right? So you get a capital account statement, it's saying 10K, and you're like, yes, I wired 10K. Mm-hmm. Documents are there, and you can kind of feel safe about that legal structure, if you will. There's side letters in the system. So if someone was giving you a break on carry or management fee, that's being delivered to you.
Wow, cool.
And then you're kind of done, right? Investing. And then you're waiting for updates. And that's really comes from the organizer or syndicator. Are they going to give you daily updates, weekly, monthly, yearly, like however they're going to do it? And they can share that stuff through the platform as well. And then you're going to be waiting for a tax return, and that can be done. The system kicks out tax packages so that tax professionals can then easily do tax returns, and then you share those K1s through the platform as well. And so it's really about making sure that investor feels secure, updated, communicated with, and that they have a place where they can find their stuff. They're not looking through emails and a DocuSign package and maybe a side platform or something like that. It's all in one place. I log in, I can find my stuff.
Totally cool. So Sally will have options for like the fund manager, right? In this case, to help process any tax documents that can get pushed toward the investor to see too on platform.
Yep.
Cool.
Yep.
And what about like the investment updates? You were talking about the communications monthly or quarterly, right? Those come on the platform as well.
Yeah, those can be pushed through as well. There's a nice bulk uploader functionality in Sally. So if you had, let's say, 100 investors or even 5, you could bring these documents and you put them up in the system, and it helps you sort them and then send them out to each individual.
Awesome. Super useful. One of the things you had talked about on a different show I wanted to dive into was you were very excited about, the speed at which you can get features developed. You had talked about previous experience of yours where it's like, you build a feature here and something else breaks over there, right? But you're very happy with how quickly features could come out for Sally and kind of expressing, if I remember correctly, some excitement around things coming for like analytics and even, AI. And I'm not making this the AI show, Jeremy, so don't shoot me. But I'm curious about if you can recall anything that you're excited about those integrations, not holding you to a product roadmap or anything crazy, but just in general, where do you see some of these new tech features getting added on?
Yeah, because this is my 5th iteration, I have the remembrance of the early systems, which what I called were very brittle. And so as you put in a new feature, it would completely break most of the system. And then you really don't know what all breaks until your users find it for you.
Yeah.
Extremely stressful. I remember in our early system, like we could not get Plaid hooked up. 6-8 months. It was just ridiculous.
Oh, for connecting bank accounts.
Yeah.
Yeah.
It was bad. So today I can ask for a major feature. So when I may say major feature, this is touching like all profiles, touching the organizer view, touching ops panel. So it's like a spider web snake through the entire platform. I can have that built in 2 weeks, tested 1 week. We're up in 3 weeks. So completely night and day between the two. Feature that we're just rolling out right now is 506C.
Nice.
So before that was a manual process. Many times I'll do a manual process just to make sure I know all the touch points and stuff like that and remember all the features and functions that are needed. But that's been a 3-week build to get 506C put into the system.
And so that allows accredited investors to come in and invest, right?
Yeah, so the system's all accredited. 506B is when you self-verify. So you basically just say, I've got $1 million in the bank or I have a high salary. 506C is when you have to prove that you are accredited. And so 506C offering allows the organizer to advertise or tell the world, hey, put on a website, email blast whoever, get on the phone call, do a commercial, radio ad, whatever you want. Put it on TikTok. So if you're just gonna just send it out to the whole world, then that's a 506C offering. And when you do that, everyone has to prove that they are accredited, sending a bank statement, letter from your lawyer, showing tax returns, stuff like that. And so I'm really excited about that feature. Upcoming features for this year would be analytics and some exciting things about tracking people's actions or behavior. So as an organizer, you want to know if your investors are in the system. You want to know where they are. You want to know, did they check out something, or, kind of what are they doing? Are they interested? How can I get more data about them? And so an analytics kind of module, if you will, to then track and give you a lot more information about it. I'm going to work a lot on distributions in this 2026. So right now I have a distributions module, which is sharing and communicating back and forth. But what I want to do is build in a kind of an API system with some banks where you can actually just put everything in the platform and click a button, and it'll send the money out from the platform rather than leaving platform, logging into the bank and all that stuff. Because we're collecting all the information in the system. So it feels like a waste of effort to take all that information, print it out, walk over to the bank, type it all in, right? Let's just integrate everything. So that's another big one. And then the there's a million features in my head, but another one to mention is membership sales. So what's another great thing about LLCs or these special purpose vehicles is, let's say you've got 10 investors in, say it's in a real estate project, it's an apartment complex, kicking off some nice little cash each month. And somebody's enjoying it, but they're like, you know what, this has been fun, but I would like to spend my money someplace else. And so they're going to sell their seat in the SPV. And so in the platform, you'll just be able to click some buttons and people will get invited and documents will be generated and people can sign and people will get swapped and the seats will get changed. That's important, right? For distributions, taxes, and things like that. And so I've got a version 1 of that in the system. I'm excited to augment that and grow that function and feature and module.
That's pretty cool. That one in particular too. So it's kind of like the secondaries then, right? LP secondaries, that if one person invests and they're like, well, I'd really like to get my money back, someone can be like, sure, I'll take your shares, right? Type of thing.
Yeah.
So I haven't heard about that in anywhere. I mean, obviously I know it exists, but I haven't heard that anywhere else. So that'd be pretty cool. Sounds like you got some really cool stuff coming. I'll keep up to date with what you got going on, Jeremy.
Yeah.
Let's pivot a little bit. Let's pivot a little bit about, you've been in private markets for quite some time. Like you said, I think you said 2003, not the 2013, 2 different milestones here. And I'm wondering if there's, just kind of, like I said, pivoting and serving this a different way. Are there any trends you're seeing with kind of private markets with these SPVs that you're, I would say, excited about, but you think it's really cool that things are trending that way, right? Because just to kind of add some more context to this is when AngelList called you up, you guys weren't even using SPVs, right? And I know, additionally, you had talked about previously as well that as you see Sally getting more and more popular, it's because of network effects and some sponsors using Sally and other people using it as well, but also just kind of word of mouth by you satisfying your customers, right? And of course, from then, there's kind of a market saturation that happens with SPVs. Everyone knows about this now. It's now common nomenclature. So, kind of from that lens, what is interesting to you? Were you thinking like, oh, that would be really cool if, right? Everyone knew about SPVs, but also like what else, if anything comes to mind?
The secondaries thing that I just mentioned to you has been something that a lot of groups have wished that they could solve.
Yeah.
When you sit on the cap table of a large project or like a venture fund or something, they restrict the trading out, if you will, of that seat. They like to control who sits there, and I'm comfortable with that. But I was just on a phone call with a client who said, this person is in this, can't remember what deal it was, SpaceX or OpenAI or something, right? Very popular deal. And they would like to sell their SPV. So they have an SPV sitting on the cap table of OpenAI. I can't remember the name of what company.
Sure.
And they want out. And if they tried to just leave, they can't swap the name, right? It can't be Steven's on the cap table now. Jeremy wants to be listed as Jeremy, but I can take that SPV and kind of just buy the SPV. So it stays the original SPV or person on the seat. But now I get to kind of snuggle up and get inside that SPV. And now I get the future benefits of whatever future exit comes up. And so there's a lot of that happening and going forward. And I'm able to really build some pretty cool modules around that. The other thing that I see is that people are starting to really blur the lines between a venture fund and an SPV. And what I mean by that is this is an SPV and it had clean lines and it behaved a certain way. This is a venture fund or private equity fund and it has clean lines and behaves a certain way. And over the years, they've started to merge into each other. And what another great feature that I'm excited that we're building here early 2026 is like a venture fund private equity module so that users can say, well, I want a little micro fund where I'm going to invest in 5 or 6 real estate projects. And I'm going to do some capital calls. But I also want to do SPVs and I want to allow my investors to jump between the different vehicles that I'm launching and sponsoring. And so I'm seeing a lot more kind of just flexibility, blurring of lines, and just excitement around whatever the deal tends to call for. I can get that done with the structured vehicle that I have. And so the more ubiquitous, the easier, the more affordable, and kind of that one platform where you can do whatever you can dream up, right? It can be done on the platform.
Yeah. And so the options, I'll call limitless for, all intents and purposes of however the investor, however the deal makers and want to structure their deals, but also that flexibility for the investors to be able to invest in so many more things too, right?
Yeah.
And so is the kind of the takeaway and the trend, the thing that excites you and the trend there is that's not really being done as much. And so this is where it's heading because what is it because of tech or is it because of policy and laws or a little bit of both?
I think it's more tech, it's more comfort around it. Another thing that excites me and that allows tech to allow for this is very squarely for investors. So typically, and we've been talking this whole time really about how organizers, syndicators, GPs may use an SPV. I created a product on Sally, which is I call kind of fund of one. What I mean by that is, let's say you're an investor. And let's say you say, well, I have $100,000 and I want to do 10 deals, right? Just throw out some numbers.
Okay.
You could set up like a holding company. So we'll say it's Steven's Holding Company, LLC. And every time a great real estate project comes up, you take $10,000 out of that 100 and you invest. And so you've got project A, project B, project C, 10 projects in your holding company. And so Steven's Holding Company is sitting on the cap table of that project or that investment. And then let's say one of those projects is valuable, interesting, and someone says, I want to buy your seat, Steven, to project C. Well, that's difficult because you have to kind of rip that out of your holdings and you have to go to the project and say, hey, I want to swap the seat. We discussed about this a minute ago. I want Steven Holdings off and I want Jeremy Neilson on. And many times they say, no, I'm not doing that, right?
Yes.
So in Sally, and one of the ideas is if the SPV was affordable enough, let's say $500.
Sure.
Could you then say, okay, I'm going to put all 10 of those into a little SPV?
Yep.
So now SPV C or 3 is sitting on that project. And then like we described, you can sell that SPV to somebody.
Got it.
So the technology allows for a $500 SPV. And what's great about what I've been talking about is what we've talked about, the nuance and the complexity of an SPV. But the SPV I just described, a fund of one, it doesn't have to really do a bank account. You don't have to do KYC AML. It's just you. You don't need to do security filings. You don't even need to do taxes. So if you're just doing something very simple and it's just you and it's just you trying to structure your deal so that it gives you optionalities for secondaries or some other purposes, if you go to like an SPV house, they have lots of humans they have to feed. And so, they don't want to do a $500 SPV, right?
Yeah.
So, but I've got software. I'm not paying anybody. I'm just paying AWS. And so it's much easier for me just to create something that says, click a couple buttons, drops you down an SPV. You don't have all this extra stuff. Now you've got your stuff organized, clean, and functional.
Got it. And on that note, this is of our own opinion. This is not tax legal advice, and this is not sponsored by Amazon. And so, but so that's really cool. What I'm kind of hearing between the lines there is tech is allowing more flexibility and optionality, because what used to be cost prohibitive of setting up entities because of the humans setting them up, tech can do a lot quicker. And so we have more flexibility what we can invest in and how in the architecture or structure of how we invest.
Yeah, for sure. Because of the architecture of Sally, I can have all these different workflows. If you go to one of those big houses where they've got pretty archaic tech, right? They don't have the ability to say, fill this out, don't fill that, skip this, right? So for me, I can just take it all away and I just present just the fields I need, because I have such flexibility with the architecture that I have with my system.
Dude, I love it. That's pretty cool. It's cool to see where, things are going with that. And let's just go the opposite from one question here too. What are you worried about people are underestimating? Anything come, or maybe another way to ask that along the lines of, dealer's choice, your choice, which one you'd like to answer is, what are most people misunderstanding or myths that are out there that, that are no longer true with Sally or in the market of working with SPVs? Any of those questions? You feel like I can repeat any of those again?
The thing that I discover when talking to clients is they just don't know the depths of nuances that are available to an SPV. And the reason why there's a depth of nuance is because of lawyers. And I'm a lawyer myself, but lawyers are the master kind of customer service group, right? They just always say, sure, I can do that. And they can, right? Just through contract, through various, if all else fails, right, we'll sue somebody and we'll get the court to, give us a decision, right? So they are extremely permissive, flexible, and great customer service. And so what that does is it creates layers and nuances, complexity, and optionality. And all those are available. And so when you hear kind of the description of an SPV, it's like, oh, that's pretty simple. But when you don't know is like, someone's going to call and says, I want to use my IRA, right? That's blowing my mind. Can I? What does that involve? Someone says, I want a side letter. Somebody says, somebody wires the wrong amount. And now what do you do with the document? And there's so many little nuances. Just like me, I didn't know. I just said yes to AngelList, right? And started hacking at it and building. And so I don't want to scare people off, right? That's not the point, but people underestimate the optionality that attorneys have built into private asset investing. Mm-hmm. And I think one of the big reasons there is because a lot of people that do private asset investing are very wealthy, and they will hire an attorney to say, make it happen. And they do, right? And so now we have another use case, another option, another approach. And unfortunately, that very large investor is now doing an SPV. And he's like, I do this with my $100 million venture funds. And you're like, well, this is a small SPV, right? But it's introduced into the world of all private asset investing. And so just having somebody that knows what they're doing or been around is far more valuable than, even though Sally's the best price in the industry, I was going to say, instead of something something cheap or what's the lowest price, but I'm the smartest and I have the best software and I'm the best price. So Trifecta.
Appreciated the shining the light on the, you said optionality, but I was going to say like the shade of gray, right? Is kind of what it is. The shade of gray of, well, it could do this and it could do this and it could make you a sandwich and you could invest with it, right? Type of thing. But working with, people who know what they're doing, certainly. And I think also another, if I was correct me if I'm wrong here, but what I was also hearing there is that although there is a lot of nuance, great nuance that can be written into really an LLC for a specific purpose, right? An SPV, or there's also a lot of things that can be standardized too.
Yeah.
Right. And so looking at it from both perspectives and kind of like knowing the rules so you know which rules to break, but also knowing the rules so that you know what will be standard in most of the cases that will work for you at a really good price point too.
Yeah.
Yep, cool, dude. You have a ton of stuff, blogs wise, videos, etc. I have no doubt that not only have we not covered all of the questions for people, but also that people are going to want to learn more about SPVs too. Tell me, listeners, where they can go find more about this to, get some more of their questions answered and maybe some other things too. Like, just where they can get more education.
Yeah. So Sally.co, SALLY. Don't think I have to spell it, but just in case.
All good.
Got a blog there. You can reach out, get a demo of the software. And then I have a YouTube channel called All Things SPVs. And my goal with this YouTube channel, and I continue to build it out each month, is to teach you all things about SPVs such that you could do an SPV on your own manual. I provide links, documents, forms. I walk you through the exact form and show you exactly how to fill it out. And so if you ever want to do an SPV on your own, by yourself, I'm going to teach you exactly how to do that. And so that's the goal and the mission behind the All Things SPV YouTube channel.
Outstanding. All links will be in the show notes as well. Go there, check out Jeremy's stuff, educate yourself, especially investors here listening, thinking about syndications and specific assets versus funds, and that kind of stuff. Seeing what the people you invest with have to do and how Sally helps to solve those problems and really value provided for the operators that are, you're investing in their deals really helps you understand the complexity of what happens behind the curtain so that it makes you think, oh, this investment or these people, et cetera, it really makes a lot of sense to invest in that deal as well. So go check out Jeremy's stuff. Jeremy, appreciate you. Thanks so much for being here.
Thank you. I enjoyed it.
Cheers. Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in the future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.